Hi there, traders. This is Brad Gilbert. Now, just an early update for those traders down in New Zealand, Australia, who are looking at the Kiwi CPI numbers, right? So I haven't had a chance to do the full analysis across the board, but this data is coming out in 20 minutes. So I thought I'd just do a quick Kiwi one. Now, expectations for CPI. Now, there's not many numbers that come out of New Zealand, right? So this is a very important one, obviously, for the whole interest rate sort of cycle. The expectation is 1% for the quarter on quarter and 5.9 the year on year. Now, the numbers to really watch, the low and the high. Okay, so you can see those there, 0.8 to 1.2 for the quarter on quarter and 5.9 to 6.1. Now, you got to weigh things up here because this isn't such an easy trade, right? So there's a couple of issues with obviously the Kiwi. For those traders who are just new to us, the Kiwi liquidity is very thin, right? It's not like you can leave orders around, because what that means is when the liquidity is very thin, it means just before the release, you will get a wider spread in the market right on the release, much bigger than the other major currency pairs. So if you're thinking about going in with a cheeky pending order just either side of the market, you could actually really, it's a very common thing to get chopped up liver before it actually comes out. So just be aware of that. Now, just having a look at the Kiwi and what's going on here. Now, the overall dollar, US dollar, is going down, right? So ideally, Kiwi should be going up, right? Well, that's the easiest trade because the dollar trend is set. Now, what you would like to do is see an offset here, see stronger numbers, then the Kiwi moves higher because they're buying New Zealand dollars and they're selling US dollars at the same time. But my concern is that we might, well, everyone's looking for weaker numbers, right? And the trend, the data is sort of trending down. So if we get weaker numbers, yeah, Kiwi's going to move down. And we do have a support trend line here on the Kiwi against the US. But how far is it going to go, right? It'd have to be dramatic because otherwise Kiwi's going down and the dollar's going down. So they sort of neutralize each other. I think you'll get a move down and then sideways trading activity from there. So that's the dollar, right? And the dollar, if you weren't looking at the markets or haven't had a look yet, the dollar created a little bit of discombobulation around the really good Canadian inflation numbers, which were much weaker. But you know what? The whole trade was a bit messed up because, you know, oil moved higher. You got the dollar sort of doing different things with retail sales and all that sort of stuff. So a little bit confusing. Kiwi CAD, I would have sort of rushed into this because we've got a nice support trend line here. But, you know, the CAD numbers were, I know the housing numbers were strong and inflation was much weaker, which means, you know, it takes the pressure of the Bank of Canada to raise rates. To me, that's like a bit of a sell CAD situation, right? But the situation is we've got a lower Kiwi CAD. Euro Kiwi, Sterling Kiwi, they've already moved a massive amount. And looking at what happened with Euro CAD and Sterling CAD over the last session, right, I'm a little bit hesitant to jump in here. If anything, Aussie Kiwi, it's a natural sort of flow between these two. They work very closely. Now, after the weak Chinese numbers on Monday, Aussie and Kiwi drifted lower. But if anything, the Aussies obviously outperformed the Kiwi since, and this may well be a bit of factoring in of a weaker Kiwi number, right? Makes sense, and that's where you get it. But has that move already been factored in somewhat? So looking across the board here, right, I can see a weaker Kiwi coming out here, but it doesn't really work for the weaker dollar. So what you should be doing with your analysis, and this is what I do a lot, is what's the easiest trade here? Okay, so once again, if you come back and look at the dollar overall, like the dollar index, yeah, it's heading down, just drifting sideways. All these instruments are going up. And I can see sterling sort of drifting sideways until these trend lines are broken. These things are still up, but the dollar trend is the key to it here. It's the dominant force. So if we've got all these other currencies now catching up to that part of the cycle of the US dollar, well, that's going to blow things out a bit. And it sucks because you can't get the nice, easy trade you want. Like the easy trade here is strong Kiwi numbers, Kiwi goes up. Okay, now what does it do against the other crosses? Well, it's very close to doing the same thing against Aussie Kiwi. There's downward pressure, you know, partly BOJ and the yen crosses all drifting lower. Euro Kiwi, Sterling Kiwi, interest rate differentials, the prospects for future hikes in Europe and sterling, well, they look like they've been factored in. So would stronger numbers correct that a little bit? Potentially, right? What about weaker numbers here? Well, I think these moves have already happened. And then, as I said, you look at Kiwi CAD and you're like, well, CAD inflation is much weaker than the range of the outcome, but Kiwi CAD's lower. So, like, to me, I'm like, hang on, I'm confused is where I'm getting to, right? So I'm thinking about the liquidity and the lack thereof. I think we'll see, you will see a knee-jerk reaction on the numbers, right, across the board. But will we get a follow-through trade here? If it's weaker Kiwi numbers, I don't think so, right? I think Euro Kiwi, Sterling Kiwi are already sort of cooked. Kiwi Yen's in the middle of the range. Kiwi CAD's down on its lows, and I don't like that at all. I would have thought that would have been higher. Maybe stronger Kiwi numbers really gives that a blast to the top side. And Aussie Kiwi, well, it's in the middle of nowhere, which leaves us with, a potential short-term trade here on the Kiwi itself. But then you're messing around with low liquidity and all these sorts of things. So anyway, I've got a few reservations about sort of ripping in. The thing to remember is, and I don't want to like saying that, like just remember, if these numbers are dramatically weaker than the forecasts, okay, and what I'm talking about is lower than the low of the range here, like the Kiwi economy has the ability to stop on a dime. Unlike the US economy and all the bigger economies, right? They take time to slow down. Really, like the Kiwi economy doesn't do that, right? The exit door is very small. If this thing shutters to a halt, the whole thing stops dramatically. So just be aware, really weak numbers, it may override the weaker US dollar, but you're looking for significant weakness to get into that trade. And that's what I'm looking for probably at this stage, because everything's cooling down as far as the economic numbers. So, what would I be looking for? Something like 0.5 for the quarter on quarter, maybe 5.5 or 5% here for the year on year. That'll really put the cat amongst the pigeons, and the Kiwi should fall against everything, right? It's a big ask to have that much variation in the data, but don't forget there's very few numbers that come out in New Zealand. It's not like everywhere else. So this is a big one because it does, it tells us a lot about what the RBNZ is going to do. I should actually say, like, this is be rude of me not to, if the numbers for some other weird reason do come out above the highs, well, that's where we are going to get a significant move on the top side. But don't forget, those moves that I'm talking about, they're outside the range, so they're going to be more volatile. So expect that. Maybe go in with a smaller trade size if you are trading, and just keep a close eye on things. All inflation numbers have started trending lower, so I can't really see that high expectation. But you've got to factor it in. Otherwise, if it happens and you haven't, you have a brain explosion, you jump in and it's all a bit of a mess. So try and pick the side that you think fits the picture. Unfortunately here, a lot of these things don't exactly sort of get me highly stimulated. If anything, I'm sort of pulling back a little bit, which to me doesn't mean no trade, just means a smaller trade size, and especially with the lower liquidity. All right, guys, good luck. I'll finish the rest of the analysis and we'll get back to you shortly.